A rally in U.S. stock fizzled as sellers stepped in. Around 10:15 this morning, the Dow Jones Industrial Average was up about 170 points, but at the close, the Dow gained 57 points. Shares of some banks, such as Bank of America, J.P. Chase, they gained, and the shares of technology giant Microsoft, they rose, added to values of News Corp and Comcast. Our Courtney Donohoe joins us from the New York Stock Exchange with more. Courtney?
Well, Pimm, we faded in the afternoon with all the heat here in New York. Just kidding. But energy and tech stocks, they made a move in the final moments to send stocks into the green. Well, earlier in the day, we saw a big pop in stocks. Investors, they were shrugging off the bad economic news from the service sector. The Dow was up 172 points, as you said, in the first hour. But we saw stocks fade off in the afternoon. Citigroup saying retailers will suffer a consumer hangover that lasts through the holidays. Cutbacks on aid to the unemployed and reduced consumer credit, some of the reasons. And some of the worst performing stocks today were the retailers. We saw names like Home Depot, Macy's, Nordstrom, all falling on that report. But as I said, come back in the final half hour of trading. Dow up 57 points.
Now, Courtney, one group that did well today were the shares of hospital companies. What was the story?
Well, they did quite well today. Barclays said the industry's drop since May was overdone, and Barclays points out the group has dropped almost 19% since the end of May, much more than the S&P, and now they say it's time to become more aggressive on that group. They said the companies will be able to cut costs to offset lower volumes. Tenet Healthcare was the best performer in the S&P, but we also saw community health systems gain too.
Now, Courtney is speaking about Barclays. Barclays comparing their call on the market's direction to the movie Animal House? What do they mean?
Yes. Well, you know that scene at the homecoming parade. Well, for those of you who saw it and those of you who didn't, chaos starts at the parade because of the deltas. You see that right here. And Kevin Bacon's character, he comes out and says, "Remain calm, all is well," while utter pandemonium's happening. And then he gets taken out by the panic crowd. So Barclays is calling for a summer rally on improved macro data and a positive market response to earnings. And they say that's putting them in the position of getting steamrolled by the crowd like Kevin Bacon was. But Barclays says as hard as it is to try to build a case for a double dip recession, they haven't found sufficient evidence for that. And they still think that the market can rally. But recent data is telling them that investors should go for higher quality and defensive sectors and also individual companies too, Pimm.
All right, stocks, chaos, Animal House. All right, now we've also seen a bit of a rebound in the euro currency over the past few weeks, but some strategists are saying there's more pain ahead for the euro.
Yeah, there is more pain ahead now and next year. Maybe the time to take that long-awaited trip to Europe. Well, the most accurate FX forecaster says the euro may reach parity with the dollar next year, and we're going to see the euro drop as the region continues to try to get its debt under control. Well, strategist Sean Osborne of TD Security says the euro will drop to 113 in the third quarter, to 108 by year end, and by May be trading near even with the dollar in 2011 before bouncing back. Pimm.
Thank you very much. Courtney Donohoe reporting from the New York Stock Exchange.